crypto holders have fallen once again for the ultimate trap. And we do have the CPI inflation data, as you would know, which is in, and that led to a massive downturn in the market. So we have to start all over again, reevaluate, look at what the market's saying. But for those of you who have been watching for quite some time, I did warn you that risk is to the downside, and it will continue to be that way until the Fed actually pivots or things change from a macro perspective. So I'm not a macroeconomist, but I can tell you what a downtrend looks like, and pretty much looks like that. So with that being said, on a 2-week chart, I wanted to bring this one up again. It's getting worse and worse, guys. I mean, we're going to soon be going on to 4 months outside of this lower logarithmic growth curve on the lower band. That is not good. The longer and longer that we spend underneath this, the worse things become long-term, because it starts to change the high time frame perspective and pull down all those important moving averages and EMAs on the high time frame. So I really hope that we just get a capitulation soon, price-wise, that we capitulate down into this lower area and price gets bought up with massive demand, and this can all be said and done and over with. So line in the sand again continues to remain what we had previously on this chart, which is $19,535. We did, of course, break below that, but then as you can see, this area was respected. Price came back up, held that as, call it closed above it. So sort of forming a psychologically important zone over there. But the more times that you come down to retest, the more likely it is that price will eventually get sent through rapidly, and there isn't that much demand that lies underneath this area, underneath that $19,500 level, especially if you start to see a closing candle over here like this. Any closes underneath that could turn out to be quite disastrous for the Bitcoin price and the whole crypto market as a whole. But everything is being led, of course, by equities, and we'll touch on that in a little bit. Let's first go on to this chart over here, which is the weekly chart. So as you can see, it always interests me how these levels work out. So I mark out the range high, the range low, and as you can see, yes, we pushed through it, but then look at that, came straight back down below that level. So the week opened, essentially what the information is telling you is that the week opened below the previous week's range high, pretty much almost in line with that. Bullish momentum got taken to the upside and then pulled straight back down, all the way down. This looks like a massive, massive bull trap at the moment. And there's traps all over the place. If you look at this chart over here, this was a massive bear trap. So very much a ranging market at the moment. And I would expect that anywhere between this $18,500 and $22,000 level is kind of going to be your primary range for the next while. Once we break that range, whether it's to the up or the downside, I would expect and close, more importantly, break and close either above or below that range. I would anticipate that would be the most likely next major direction for price action. Pressure, as I've said many times before, and I'll say again, continues to remain to that downside. And I just don't want to see this 200 MA start to curl over. I just want this all to be over and done with, and price to recapture above that level before that starts to turn down, because long term, that would be disastrous for crypto. So looking at the US stock market, $1.6 trillion wiped out. Huge, enormous, big red day. And now the question is it going to be a bounce or a continuation to the downside? That's a game that you have to ask yourself, and the game that you have to play. So if you look over here at what Urian says, he says that there's no bull. If a 14-time forward multiple is the correct valuation, then simple math will tell us that the fair value for the S&P 500 is 3,200 at an EPS of $230. This suggests that the bear market is not yet over. So let's quickly click on this chart over here. And then I want to compare it to my actual chart. So he's got 3,400, which is still quite a bit down. So let's look at the S&P over here. S&P, pull that up. So we'll mark off his levels out of interest sake. He's got 3/4 considered fair value. What would that look like? Well, pretty interesting, actually, because that lines up with my key quarterly level. I've got it at $3,385. That has been the key quarterly that I've been looking at as a primary zone. Anywhere within that quarter or the quarter below that, which is coming in at 3,200. So you can see the macro economists at least seem to agree with what my technical analysis chart is showing. But with that being said, look, I don't want to say that there's any guarantees that even if we do come here that we're going to bounce. No guarantee. All that you can do is calculate your risk and then make a educated and calculated decision based off of that, whether you want to long, you manage your risk, knowing where you would be incorrect and things are going to continue back down. Because remember, the S&P is also stuck. Let's put on a weekly so we can see this from a high time frame. It's also in this massive parabola that's been holding for quite some time. As you can see with COVID over here, we did break down below that parabola, and we actually closed 2-week candles below that and then recaptured that. It got sent back to the upside. So that will be interesting to see. Like, I think when you put this on a weekly, at a minimum, we're going to at least hit this moving average, which means that for the S&P 500, new lows should be expected. Nasdaq had its worst day of the entire year, biggest sell-off, and you have to ask yourself now, look, is this going to bounce from here, or is this going to be a continuation candle? I don't know if I should give my personal opinion. I would always tend to side with the trend, and I mentioned this yesterday. I think it was in the daily candle newsletter. I think I did bring this one up. So make sure you subscribe to that. The link is in the description below. If not there, I remember clearly that I did also put it in the Discord on Kyle's thoughts in that private group over there. And I said, guys, just know what you're dealing with over here. Yes, price is still trending upwards and the futures was opening to the upside, but ask yourself, is it really worth longing for another 2% on the Nasdaq straight into resistance? You can see that you have, of course, over here, now you have your first rejection off of this trend line, next lower high. This one was a bit of a bull trap over here because it broke this, got sent up, yet it was still under that all-important moving average over there. And I lined this, or at least outlined this as a next potential area. If bulls were going to push this up over here, this would be my next area where I'd go mega short with high confidence that it was going to turn. But if you look at that, we turned even before there. So now we have the third lower high from a macro perspective, and on the Nasdaq I'd be targeting 247 as the key quarterly level, and same thing with Bitcoin. You know, I would hope that plays out quicker or sooner rather than later. There's nothing worse than a slow bleeding market. It's better to just capitulate and get everything out of the way as soon as possible, wipe out all the longs, and then reset and start a new crypto cycle, because or even a normal equity cycle, because that's how typically these markets do reset. Is you're either going to capitulate through boredom over time, or you're going to capitulate through price with high volume sell-offs, and so far we haven't really had anything too major in that department. So I think it's also important. Let's look at the Bitcoin dominance. I'll be interested to see how that's been playing out over here. So we have two charts. Remember, two different Bitcoin dominance charts. I have the one that minuses all the stable coins. So you can see that this is still stuck below mid-range. It did temporarily push back up on that Bitcoin dominance, on the main Bitcoin dominance that everyone else uses, including stable coins. Look at that enormous spike to the upside over here, back into the range low. So this would be some sort of a deviation. And now the interesting part will be, is this Bitcoin dominance going to continue to track on up towards mid-range, reclaim that, and maybe even the range high? Look, you know, you should expect that Bitcoin dominance is going to go down and down and down over time, because they just keep creating more and more cryptocurrencies, which dilute the market. I don't even know how many we're on now, but I would assume it's somewhere around the 10 to 20,000 different cryptos that are out there in the world at the moment. So that is going to steal from the Bitcoin dominance. But look at that massive, massive spike. And I have said before that a lot of people assume that, you know, if the Bitcoin dominance was going to spike, that would be like kind of like a bullish shift in the market. And I said, no, when you look at these charts over here and you look at the price levels, most of the time the Bitcoin dominance has shot back up. It's more like treated as a flight to safety, where people are getting out of their other altcoins and into Bitcoin. And usually when this gets towards the range high, you're actually seeing lower prices at the top here than what you do, because I overlaid the prices and correlated them. So the last time Bitcoin dominance was this high was when Bitcoin was at $29,000. So that's something important to keep in mind. So the inverse Kramer ETF, not Jim Cramer Twitter account here, says They took a screenshot from him yesterday, and he says here that the Fed may be winning against inflation, says Jim Cramer, which we know is not the case, which is why the CPI came out worse than expected. And I don't know who to give credit to, because I was driving whilst listening to this Twitter Spaces, but what the lady was essentially saying is that, there's actually two tools that the Fed have when it comes to combating inflation, and that's either by raising the interest rates to try and bring inflation down, which now we're seeing is not working, or they need to be more aggressive on reducing the Fed's balance sheet, so quantitative tightening on steroids, basically. And so far, if this is not working, it makes me wonder maybe the Fed is going to start going into more aggressive quantitative tightening, and that would mean even more aggressive sell-offs in crypto. So definitely not a risk-on environment at the moment for the markets. You have your inverse chart over here, rejected or bounced at least perfectly off of that supporting trend line over there, and now it's tracking back up. So this would be 1, 2. If we get to this level over here at about 19.1, that's going to be our third touch on that horizontal. And then using simple technical analysis, this would kind of look like an ascending triangle. So if you look at it like this, I'm just going to draw a rough draft. This is kind of your ascending triangle, which would have a measured breakout move all the way into this resistance zone. So let's make that nice and big, and I'll change the color for you. So if you see something like that, I mean, it has a measured move. Let's grab that. So as you can see over there, you can kind of measure these moves. And if this does break out, it would take it straight into the resistance zone, which is between 10 and 12K. Let's just stick with that. It actually says 8, but let's just focus on 10 to 12 now as a primary horizontal level. So keeping an eye on that chart. I did mention to you yesterday that, look, if price closes above here, there's a possibility of a continuation to 24,480. But if you see price come below like this, which it has now, that would be an enormous bull trap and a confirmed bull trap. So especially if we see today close, I'll show you a tweet just now from Al Capo, who's still targeting high prices, which I find quite interesting. I find it hard to believe that this can rally now from here all the way to 23K. That would probably form an even bigger bull trap, because you'd be left with a massive wick behind, and people would think, okay, bulls have got full control over here. But I would encourage you not to be fooled by that, because as we know, the overall downtrend is still intact over here within this parallel channel. So moving on to this chart over here, I just wanted to touch on these Fisher distance from the EMA. So for those of you who were or are wondering, what is this? It essentially measures different exponential moving averages, and how far those exponential moving averages, it puts it into like an oscillator type of indicator, and it measures how far have those EMAs pushed away from the overall general price, the general trending price. So anytime that this reaches extreme levels, which would be around 3 or 4 on the upside, or minus 3 or 4 on the downside, then you know that it's probably going to continue to the downside. At least price will. So it's gonna revert back to the mean. I did have a trend line over here. It broke above that on the daily, and now it looks like that is coming back down. Let's see what the other time frames look like, just out of interest. I'll look at the 3-day, the 5-day, and the weekly. 3-day is angled up. Let's see what the 5-day looks like. 5-day kind of consolidating around the 0 point mark. And then let's look at the weekly. Weekly also kind of sitting around in neutral land. So looking for a major decision on the higher time frames over here. But with that being said, let's see what our other chart shows. So CPI inflation data, here it is. Essentially, these are the results. We can grab another one of these down ones, and I can move that over. Oops. Okay, let's just grab that. Okay, because this was its effect on price action. So I'll try and make it a bit clearer for you. So anytime that we got these prints, the down basically means that it was downward price action following the print. So you have all the forecasts over here. What I'll do is I'll post this on Twitter afterwards. I have posted before, but I'll do it again after the show, just so you can kind of take a closer look at what I'm talking about over here. So CPI forecasts in the past, anytime that it comes in worse than expected, which is what we had yesterday, it's usually followed by downward price movement. So yesterday they were expecting a forecast of 8.1% and came out 0.2% higher. So we had 8.3%, and consequently price came to the downside. Lining that up with technical analysis, we did mention yesterday that, look, I told you guys, if you are going to go long here, just know that you're literally longing directly into resistance. And look at that perfect rejection out of the zone. And now the next major important economic event that's coming up is on the, I think it's the 20th or the 21st of September, is the FOMC. And if you do remember, and you've watched my shows for a long time, I have mentioned that historically within markets, the most damage has been done in the final week of September, and there's multiple reasons for that. I don't want to get too much into it. If it happens, I'll do like a deep dive into why I knew this was coming. But and I'm not saying there's any absolute, but I kind of have my eyes more fixated still on the downside and the potential of the major capitulation happening in the third week of September. And it's got a lot to do with the major funds around the world that have to rebalance their portfolios at the end of the quarter. So coming into the end of the September quarter, they need to shift things and big options closeouts and things like that. So this is a very risky environment, guys. You've been consolidating in this range over here, broke above, came down, consolidating in a downtrend. This is still a downtrend, big nasty candle over here. And I'm not saying you can't long from these levels. There will be bounces along the way, but manage your risk. Don't think, okay, cool, like listening to all the memes out there. Look, this 18 to 20K level keeps holding. This is generational support level, must bid. I mean, it takes literally one big player to come out and sell into that support, and it's going to crack straight through. So focus on the overall trend. You can see prices now fallen back below our EMAs on the daily, which is the 12 and 24 EMA. And then it should be the same thing on our other ones. Let's look over here with the, I wanted to put on the 9 and the, where's that other one? The 34. Here it is. Okay, the 9 and the 34. And then let's just turn that off. Have I got the 9 on? No. Wait, that's the wrong one. Sorry, guys. There we go. Bright lights over here. Can't see properly. That's why I wear those goggles sometimes. Okay, cool. Let's look at this. So I did mention as well, when we use these EMAs, I said, cool, bulls made a beautiful bullish momentum move over here, got it to the upside, but you want to see them hold multiple days above. Preferably, you want to see them hold above this green box over here. That will give the EMAs a chance to cross to the upside in the way that it has previously. And if it can keep holding above there, then great. Now you have an opportunity for bulls to take back control. This move took it all the way back to the downside. They didn't get to cross back up. And remember, yesterday I also spoke about, you have to ask yourself the question, are we in a trending market? Or are we in a ranging market? And I said, I think the probability is much higher that we remain in a ranging market. And therefore, this would be considered on both Bitcoin and Ethereum, a deviation back to the downside, targeting back down to range low, eventually breaking that down and continuing what would be a trending market, but to the downside. So that's the way that I see it. Price stuck below the important EMAs, not good. Don't want to be in long positions right now. Maybe leverage longs, quick scalps, things like that. Do what you want on a day trading perspective, but for the high time frame trader holding longs in spot and low leverage positions, not the time. You don't want to be in a long right now, in my humble personal opinion. So moving on over here, beautiful chart. This one worked out fantastically. This is what I said to you, and I think there we can take this and now we can copy and paste it. So we have a confirmed bull trap. Boom, let's put over there. We were questioning, is this going to be the next bull trap, in exactly the same way that we had it over here and here. And now, boom, we got it. It's happened. Bull trap, in my opinion. If price holds underneath this box, which is coming in between 20, let's call it 21,300 to 22,000. As long as price remains underneath that, literally any bounce into this box over here, I will definitely be looking for shorting opportunities, because the next expansive move to the downside is very, very far down. So there could be an extremely profitable move over there. Now, looking at Ethereum, this one actually worked out even cleaner than Bitcoin. There's the high time frame. We were coming directly into resistance. I was thinking that, with the whole merge and all coming up, that this would push a little bit higher, probably into this moving average and just before these highs over here, and then capture some of this liquidity, maybe even spike above these, and then create an even bigger bull trap. But bulls are that weak. They couldn't even get it there. Price started to deviate back down, and now I would be expecting further downside. So we'll take it day by day and week by week. Today is the PPI, which is also an important economic event. We'll see what the result is of that later today and how that will affect price. 4-hour chart. All that I want to outline over here on Bitcoin, stuck below the EMAs. Those will cross back down. Let's see Ethereum. Also stuck below the EMAs, going to cross back down, targeting towards the range of 1,530. Tweet over here. I did mention this. I gave the trade idea over here. I said there's an ETH short. Here it is. I gave the update on it on Twitter. I said, look, sadly, I did get stopped out. So I'm going to show you what that looks like now. A lot of you didn't get stopped out. Okay, it's on this chart. Let's quickly grab this. A lot of you didn't get stopped out, so big congratulations to you. I saw your P&Ls. You made a lot of money. I didn't want to be too I wanted to be more aggressive on my stop to cut the loss quickly, because I did think, well, if we get above this level, we're probably going to get to about 1,800, 900 on Ethereum again. And guys, that's why it's called a bull trap. It's difficult. It's difficult to trade these things. If it's called a bull trap, it's called that for a reason. It's because it's going to trap the majority of people into a bullish psychology and thinking, especially when you look at this candle. Hey, when I looked at this on the 4-hour, look at this candle over here. Let me quickly grab the highlighter. Do you see this candle over here? That one really made me start to think, okay, we closed the 4-hour over here. So I was thinking probable reversal like this, and that's why I wanted to cut immediately there, because I thought once we close here, the second candle, this can be a quick expansion back to the upside and to the 1,800 level, which is where I was going to enter the next short. But I think guys must have got really hurt in long positions on this, because I'm sure a lot of people saw it that way and went short. So moving on a lower time frame over here, look, what about now? What about price action as it currently stands? So possible that we have some sort of a bounce off of this level. That could already be the low for the day. I'm kind of impartial. I don't really want to trade it. I'm just kind of waiting. I'll wait for the next obvious trade, next perfect setup. This is in no man's land for me on Ethereum. I don't really want to go long or short from this level. I mean, if price comes back down over here like this, let's delete that now, and then I'll show you what I'm looking at. If price does come back down, I may consider a long like this, only because I have a very, very easy invalidation. I'd be looking for something like that, kind of below that trend line, targeting back up to about $1,718. That's just an example. Use it or don't use it. It's up to you. I'm not sure yet if I'm going to use it. I'll reassess a little bit later on. Bitcoin. What about Bitcoin over here? So stops got wiped out as expected on the 1-hour chart, and then came back down. Now we need to see. It's kind of looking like a range. What I'll do is I'll quickly clean some of this up. It's irrelevant. We finished with this trade now. Clear that. Take that out. So let's grab this tool over here. Let's see here. Okay, so I'm kind of viewing it like this. This is the way that I would treat this over the next couple of days or so. See that you kind of have a range over there. I mean, I could potentially push it that higher, but I'd rather be more conservative on the range. So if price does get towards the downside over here and it even pushes through, you have an easy invalidation, which would be below these lows, and then you can potentially go long towards the top side over here or towards the mid-range. If price does push back up towards here, same story, goes short, stops above this area over here. So guys, that is essentially what I'm looking at. I think I have explained the majority of it. El Capo seems to be waiting for a scam pump to 22 to 23, and then hammer time, he says. So we'll keep an eye on that. For those of you who are not yet in the Discord, have a look in the description below. Make sure that you get in there. There's a lot of alpha. I'm able to keep you up to date live. All that you need to do is use any one of my trading accounts below. So sign up to any one of those. Send the user identity to the Discord. It has a little block over there that will say fill in your user ID, which you'll get on the exchange once you sign up, and then they'll approve you in. It takes about 24 hours. So that brings us to the end. Let's see. Today's going to be another fun day in the markets. I think still a lot of volatility heading our way. And I will see you guys all on the next one. Have an absolutely stellar and fantastic day. I appreciate each and every one of you. And see you tomorrow. Cheers for now.